You raised your price target to $285 on Microsoft, up from $260. You already had it as a top pick, but what do you think's happening here? Why'd you raise your price target?
Well, thank you for having me. The bottom line is the investments that Microsoft has been making in their business around cloud, around collaboration, security, and data, they're really now starting to pay off. That plus a better spending environment, enterprises are getting back to business, SMBs are recovering, is really leading to better top-line revenue growth. You talked about the acceleration in Azure, and the company continues to operate really well, so the operating margins are heading in the right direction. The bottom line is our earnings number, our EPS, rose by almost 10% in our forward forecast, and that just brought our price target up to $285, and we see plenty of upside on a go-forward basis for the stock.
How far is that from here? I mean, just in terms of your timeline for that, because that is a big jump to go from the 232 it's trading at now to 285.
Sure. So it's about 20% upside. It's a one-year price target. And we think the path forward, Microsoft now actually has easier compares for some of their core businesses like server and tools, Office 365 for the next 2 quarters. We see further room for acceleration in some of those business lines, plus further room for margin expansion as we get past some of the tough spots like a console cycle. Console cycle, great for forward revenue growth, but while you're going through it, it depresses gross margins. So we see even more good quarters coming from Microsoft in their fiscal Q3, their fiscal Q4. That's the March and June quarters. And as we see those better quarters, the stock should continue to drive higher. We think the multiple has room for expansion back to levels that we saw last year. Right now, you're trading at about 26 times earnings. We think that could go up to about 31 to 32 times earnings as people continue to see these good quarters coming out of Microsoft.
Shepard Smith here. Thanks for watching CNBC on YouTube.